Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this session I'm going to show you a no-brainer breakout. Now, so many people are afraid of buying breakouts, rightfully so many times, because they're afraid it's going to be a breakout failure, and they're always questioning, hey Dan, Greg, how do I know this one's going to work? Well, first of all, you never know if any pattern's going to work. That's why we have a high probability setup, an entry, a stop loss, and we manage in between. But what makes our technical approach superior is that we have a high probability setup. Everything starts with there. And today's setup is going to be a breakout. Now, we trade initial breakouts and we trade continuation breakouts. We trade pullbacks and reversals on support. There's different flavors of them. But the key is to have as many traits as possible to increase the probability of it working out. So our approach is start with a compelling pattern. Okay, where is that pattern in the trend? Support and resistance? What do multiple time frames say? Is it showing relative strength or weakness to the sector in the market? What are the broader markets doing? And then, these two apply to everything. They could actually be put up top without trader psychology and proper position and money management, to have the patience and discipline to wait for your technical approach to set up, then you're going to have a hard time in this business. This was a trade. URA is a sector, uranium, that we gave to our ETF trader, which only trades ETFs. And so here, this is a daily chart. All of our daily charts are this beautiful and simple. Red and green color-coded candlesticks, color-coded volume. We have the 20, 50, 200 period moving average, which helps speed up the analysis. Now I could actually, that's not the subject of today, but I could actually take off these candlesticks, and these moving averages tell me a beautiful picture of what's going on under the hood, so to speak, once I put the candlesticks back on the chart. I have a flat longer term. I have a rising 20 and 50 short and intermediate term within a flat trend. It broke out, as you can see with the candlesticks here. Volatility contracted. These flattening moving averages are telling me it's consolidating after an initial breakout. And that's exactly what we see here. So let's start down here. This was a breakdown. Closed under all three moving averages, suggested lower prices. One of our concepts is retracement. This is a greater than 100% retracement over this pivot. And these red and blue dots, they mark off what we have defined as major pivot lows and highs, which pivot low, 3 higher lows to the left and the right. So it greater than 100% retracement and bullish price action for over a month. Let's start here. A gap down that closed with an engulfing bar over 2 bars. Another closing breakout greater than 100% retracement. Now we trade initial breakouts where it has bullish consolidation at resistance, not that runs from the bottom of the range to the top of the range. Another concept of ours on any breakout or any pattern for that matter is look to the left for longs. We need a price void, which means insignificant resistance to the left to prevent a big move up to our intended target on multiple time frames. So this was a closing breakout. That's when we put it on our radar screen for a long entry. Now, long entries can happen in many different flavors. So this one continued to go up, red bar, suggested lower prices. I have what's called a bullish correction bar, where it traded under multiple bars intraday and then closed at the high over the red bar. This is a closed trade. This was the initial breakout, which I already explained we would never take. So this is a continuation breakout in a strong uptrend after a multi-month consolidation. First target was met. Second target we sold pre-market this day. And then we had a climactic sell setup. We sold right at $27. The reason is climactic. Now, another concept, which I showed you on the prior screen, was multiple time frame analysis. Here's weekly, here's monthly. On the weekly, we use a 20 MA, monthly, a 10-period moving average. So notice here on the weekly, wide range closing breakout, range expansion bar, a buy setup and 180 reversal on support on the weekly. That's bullish. Now, here is where we entered on the daily chart. So notice all of these 4 or 5 candlesticks here are this multi-month consolidation on a daily chart. Now, although not required, we use these longer time frames for our ETF trader, which has longer holding periods when the weekly and monthly are in alignment, which they are here. So multiple time frames in alignment increases the odds of success of the trade working. Monthly chart here. This was a beautiful breakout down here in July, $13, but I didn't see it back then, or maybe I did, and we traded it then. So got climactic, multi-month. But remember, monthly chart, 1 bar is 1 month. So this is actually a multi-year consolidation, building support at a higher level. Red bars ignored. It's a closing breakout above the 10 MA with a price void. Look to the left. The weight of the evidence of all this support is to go through these prior little minor pivots. So the weekly and monthly were in alignment. We were trading the daily, had a beautiful return, 20% return on capital. We held this 19 days and made $643. Our spreadsheet just calculates position size for a max $300 loss and very easy management in between. If you'd like to see trades like this, go to mastertrader.com/ETF. Trading ETFs have superior advantages over individual stocks with the gap risk, with the sector exposure. We can pick individual sectors that are way outperforming the broader markets like the S&P 500 ETF. Check it out. Any questions, as always, email my partner Greg Capper or me. Good trading. Look forward to seeing you in the next trade review video.